Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Peloton continues to be a stock that the market just continues pushing lower. And it's been really interesting because I think the company is making a lot of really smart moves. Announced a partnership with Lululemon recently, and today actually announced a partnership with the NBA. So today I want to go over what some of these new strategic moves are, what we should look for in earnings, and how to think about Peloton as a company long term, because this is a long term recovery company. That recovery isn't going to take a couple of quarters, it's going to take multiple years. I think they're taking steps in the right direction, but there's a long ways to go. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And the first thing I want to do is just cover the broad strategy that Peloton is trying to implement and has really taken shape in 2023. That's moving from a vertically integrated business model where they're trying to sell a bike or a treadmill that's profitable and then tack on a high margin subscription. That was really what brought the company to the public markets and also what gave them such a boost during the pandemic. People were paying really high prices for bikes and then paying that monthly subscription as well. That ends up being a very profitable business if you can sell hardware and software for a profit. But what Peloton eventually found out was that the hardware business was really difficult, and there was a limit on how much money they could make and how big that market could be for selling things like bikes, treadmills, and rowers. This just isn't an iPhone-sized market. It was a very niche market. So when demand really went south, then they started losing a bunch of money extremely quickly on those bikes. You start to discount, you start to write down some of the assets that you have on the balance sheet, and suddenly those profits turned into losses really, really quickly. So the shift that Peloton has made over the last year or so is moving to be more of a software company. Think of this as a horizontal company. They want you to be using Peloton's workout classes, whether you're doing that at home on one of their bikes, whether you're out for a run, whether you're at a boxing class, at a gym, anywhere you go, they want Peloton to have a class for you. So there's very different business models and very different ways to think about the company. I think a lot of investors are still thinking about this as a bike company, but this is much more of a razor blade company right now. They want to basically break even on selling equipment and then make their money selling high margin software. So that brings me to the two most recent announcements that we have seen from Peloton. The first is a deal announced late in September with Lululemon. And the basics of this is that Lululemon is basically going to shut down their mirror content product and point their customers to Peloton. So customers who are part of their Studio All Access membership are going to get access to Peloton classes. The advantage for Lululemon is that they get out of this hardware business that's losing money. They don't have to create workout content. They can leverage Peloton for that and basically resell their service. So you take a money losing business and turn it into a little bit of a value add for the customers who are members of this Studio All Access membership. For Peloton, you add potentially hundreds of thousands of customers to your workout subscriptions. And you do that through Lululemon, basically Lululemon becoming a reseller. That is an advantage because creating those classes, creating the infrastructure is a relatively fixed cost business. So each marginal customer, each additional customer that you add is going to be very low cost on the expense side. So the revenue is going to flow almost immediately to the bottom line. So even if Lululemon is only paying $4, $5, $6 per month for each one of these subscribers, that's going to be an incremental win for Peloton. You also get a competitor with the mirror product that Lululemon was selling. You get that off the market. So you're taking a competitor out and making them a partner. I think this is just a great win for Peloton long term. But the second one they came out with was today, and that's this announcement with the NBA. Peloton has gotten a lot more involved with sports leagues and particularly colleges, trying to get people to sign up and use their services through some of these interesting partnerships. But this one was interesting because NBA League Pass will be available on bikes, treads, and rows. Peloton says that the platform is launching what they're calling the Entertainment Hub, and this will be part of that Entertainment Hub. I wouldn't be surprised if next we hear you're going to be able to access things like Disney Plus, Netflix, all from your Peloton equipment. The idea here would be to make that equipment a little bit more functional for more kinds of content. So maybe you don't always want to watch a Peloton workout and participate in that workout. Maybe you just want to go on a long bike ride and you want to watch a movie or you want to watch a basketball game. This gives you the flexibility of doing that without doing something like just bringing your iPad and strapping it to your Peloton device. I know I have done that with my Peloton bike, but this would give Peloton the ability to do that. Again, thinking about the company as a horizontal services company. Now you have the hardware. Now the hardware isn't just tied to being a Peloton piece of hardware. Now you're going to be able to access NBA games and probably other streaming services in the future through this entertainment hub. So they're really leaning into this strategy of the hardware itself being a commodity and the value for Peloton in being with that subscription. I think the next step for Peloton is actually getting their content on other companies' devices. So think about a company like Nautilus. They have a number of different brands. If you can incorporate Peloton's content into those brands, they can maintain their business as a hardware company. Peloton can grow their business as a software company. So more and more of these partnerships, I think, are ultimately good. So now, how do we judge success from these partnerships? We're not going to see it in the quarterly report that's going to be coming in the next few weeks. That these deals happened so late in the third quarter into the fourth quarter that they're not going to impact results at least until Q4 2023, probably more into 2024. But what you want to look for is how many subscribers do they have to the app and on those different app tiers? What is the gross margin that they're generating? So what you want to see is not just revenue growing, but the overall gross profit growing based on the number of customers that are added. And then can Peloton get to the point where the hardware business is break even? If they can do that, then what they need to do is grow that subscription business, keep those operating costs, like I talked about, the cost to pay staff, the cost to build the app. If you can keep those costs essentially flat, which they've actually been coming down the last few quarters, then you can get to profitability as a business. This has ultimately been the challenge, is making this transition to being a horizontal services company and then getting to profitability, because they just didn't have the cost structure in place to do that previously, but now they're moving in that right direction. So that's the way to think about Peloton going forward. That's the way to think about these partnerships. That's why I'm so bullish on these partnerships, is it makes a Peloton membership and a Peloton bike that much more valuable. And if they can increase that membership base from about 3 to 4 million to 10 million over the next decade, this could be an absolute home run stock. But what do you think about Peloton, the moves they made recently, and the future of their stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.